What if I told you that this very day could redefine financial history? A moment once relegated to speculation has now taken tangible form. A currency long dismissed by analysts and discussed only in niche circles has suddenly emerged onto the global stage. Welcome to Iraqi Dinar News. Today we are witnessing what could be one of the most significant developments in international finance in decades. The Iraqi dinar, the IQD, has appeared live on Bloomberg and Reuters terminals. After years of doubt and rumor, it is now officially listed among the world's active currencies alongside the US dollar, the euro, and the yen. Is this a long-awaited resurgence or a lesson in caution? Stay with us, because what's unfolding may reshape how we think about money, markets, and national identity. As dawn breaks across global trading centers from London to New York to Dubai, confusion has turned into astonishment. Traders are double-checking their screens, and yes, the IQD is indeed listed among live currencies. For years, the dinar existed mostly in the realm of speculation. Today, it is real. Its value is being quoted in real time on Bloomberg and Reuters. Algorithms are recognizing it. Institutional systems are adapting. Retail traders are reacting. What was once a curiosity has suddenly entered the sophisticated world of global Forex. For those who held the dinar, this is a moment of vindication. For others, it signals a potential realignment of the monetary landscape. To understand the significance, we must look back. For decades, many believed the Iraqi dinar would someday revalue. Others called it a myth, or even a deception. Economists largely avoided the topic, yet a small group of believers held on, keeping their notes tucked away as symbols of hope. Today, those notes are no longer speculative tokens. They represent measurable value. Bloomberg and Reuters are showing IQD trading pairs in real time, indicating that infrastructure pricing, liquidity, execution systems is now operational. Institutions that once dismissed the currency are reassessing their models. The question now is simple: how did this happen? This development did not occur by chance. The presence of IQD data on global terminals signals coordination at high levels between regulators, clearinghouses, and financial networks. Such a listing requires careful alignment of liquidity mechanisms, settlement systems, and compliance frameworks. It reflects months, perhaps years, of behind-the-scenes preparation. Every line of code, every risk test, every clearing agreement had to be established before this moment. The mere fact that these quotes are now visible means the groundwork has been completed with precision and purpose. So what does this mean for markets right now? Billions of dollars are moving as traders adjust to the new reality. Currency desks at major banks are recalibrating. Automated trading systems are incorporating IQD data for the first time. Order books are forming, spreads are widening, and volatility is extreme as liquidity seeks equilibrium. Early trading sessions are chaotic, filled with opportunity and risk in equal measure. Some traders will see windfall gains, others unexpected losses. As with any market debut, only time will bring stability and structure. For those who have physically held dinar notes for years, this moment carries deep emotional weight. What was once seen as little more than a collector's item may now hold tangible financial value. For believers, it's validation. For skeptics, a reminder that markets can surprise even the most seasoned analysts. Yet emotion must not override prudence. Converting dinar holdings, navigating fees, managing transfers, all require careful planning. While some may profit, others could lose in the volatility ahead. Caution and informed decision-making remain essential. Analysts worldwide are already labeling this moment as a potential turning point for Iraq's economy. If the dinar maintains stability, Iraq could gain access to new channels of trade and investment. The country could issue bonds, attract foreign capital, finance development through more favorable mechanisms. Still, important questions remain. Will liquidity endure? Will trading be sustained? Will central banks adopt IQD as a reserve asset? The answers will determine whether this event marks a new beginning or a short-lived spike. Beyond economics, this is also a geopolitical statement. A national currency is more than a financial instrument. It represents sovereignty and trust. By bringing the IQD into global markets, Iraq is signaling its intention to participate fully in international finance. This move may alter how other nations perceive its economic credibility, shifting risk ratings in trade relations. In essence, Iraq is declaring that it belongs in the modern financial system, not as an observer, but as an active participant. However, with visibility comes vulnerability. Early volatility will be intense, and market participants must navigate uncertainty with discipline. Sudden price swings, illiquidity, and execution risks are likely. Retail traders entering impulsively may suffer losses. Institutions, by contrast, will proceed cautiously, hedging exposures, diversifying portfolios, and monitoring regulatory clarity. In the early days of a new currency's emergence, measured observation often proves wiser than reckless enthusiasm. So what should investors and holders do now? First, remain calm. Avoid emotional or speculative decisions. Second, gather accurate information. Understand how local banks and exchanges will process IQD transactions, what fees apply, and what timeframes are involved. Third, diversify. Avoid overexposure to a single currency. And finally, consult qualified financial professionals. Volatile markets reward strategy, not impulse. From a global perspective, this moment may subtly shift the structure of currency markets. For decades, the dollar, euro, and yen have dominated. But now, the reintroduction of the dinar could inspire other nations with underutilized currencies to re-enter global trade. If Iraq can maintain stability, it may pave the way for broader participation by emerging economies. Investors are already recalculating risk models to account for this unexpected new player. Looking ahead, Iraq could leverage this momentum to strengthen its economic sovereignty. Stable currency performance could allow it to issue international bonds denominated in dinars, expand foreign investment, and reduce dependency on external currencies. But success requires consistency, strong fiscal policy, institutional trust, and transparency. This listing marks the beginning, not the conclusion, of a long process toward monetary credibility. Other governments and central banks will now watch closely. Some will adopt a wait-and-see approach. Others may explore limited exposure to IQD through reserve diversification. Regulatory authorities will need to update frameworks to accommodate new cross-border settlement mechanisms. Questions about liquidity, compliance, and clearing will dominate policy discussions in the months ahead. The narrative surrounding the dinar is also shifting. For years, mainstream analysts labeled it a speculative illusion. Now they must reassess. Financial media outlets are rewriting their analysis. Longtime skeptics are confronting new realities, while early believers find themselves partially vindicated. Yet narrative alone does not create value. Economic fundamentals do. Iraq must now demonstrate fiscal responsibility, stable governance, and productive investment to sustain credibility. At a technical level, early trading mechanics will pose challenges. Order routing, liquidity sourcing, and conversion pathways are still developing. Bid-ask spreads may be wide, and trading depth may be shallow. Execution errors and partial fills are possible. Investors must pay close attention to market transparency and data accuracy. Understanding the flow of orders and identifying reliable counterparties will be critical to minimizing risk. For both Iraqi citizens and international observers, vigilance will be key. News and speculation will spread rapidly. Many will promote exaggerated claims of overnight wealth. Investors must separate verified information from noise. The responsible approach is to monitor official updates, track liquidity metrics, and analyze institutional behavior. Hype can be costly. Discipline will be rewarding. One fact is undeniable. The Iraqi dinar has re-entered the global financial conversation. No longer confined to rumor, it is now visible, measurable, and tradable. Analysts, institutions, and investors are all paying attention. Some will engage immediately. Others will remain cautious. Either way, the world's financial landscape has shifted. Participation, or even observation, now carries weight. This development is not a guarantee of success, but it represents transformation. What was once speculative is now transparent. What was doubted is now observable. The IQD's reappearance on global terminals marks a turning point in Iraq's economic journey. Volatility will be fierce, opportunity unpredictable, and stability uncertain. Yet the door has opened, and a new chapter in modern finance has begun. So what comes next? Remain patient. Gather facts, not rumors. Watch liquidity, monitor regulatory signals, and proceed with prudence. If Iraq can sustain stability and trust, this moment could evolve from a headline into a historic shift. The Iraqi dinar has stepped back into the arena of global currencies, and the world is watching closely.